And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Isabelle Lee, Katie Greifeld out on the day. We're taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec join us. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. A slew of catalysts battling this market around today. Carol Massar, take your pick here. But for right now, we're red pretty much across the screen.
Yeah, we are. Definitely more of a risk-off trade. It was a little bit more evenly spaced earlier in the session. But yeah, we know what's going on. The market's so reactionary to any news on putting an end to the U.S. war with Iran and hoping that there's going to be these peace talks. But again, we just got moments ago, and you saw markets, the equity markets go down. You saw treasuries go down. You saw yields shoot up a few basis points.
And you saw oil, at least Brent, the international benchmark, hit $100 a barrel for the first time going back to April 13th. I was just saying to Carol that there's not a lot of time between right now and the end of what is supposed to be a ceasefire tomorrow. The president has also said that that will not be extended, so it's sort of unclear what happens in the next 24 to 30 hours when it comes to this conflict.
Take your pick, and I was going to pick oil, but Tim stole it for me. Yes, it's above $100 a barrel. We have Commerzbank earlier today saying that it will be above $80 a barrel by the end of this year, but I think that's not even considering all of the developments we're seeing. So oil, I think, is one of the important stories that we should be watching.
Absolutely. Here, and just a reminder, we are expected to get some earnings after the bell. Probably the most consequential for markets is going to be from United Airlines. We're also going to get Interactive Brokers, Intuitive Surgical, EQT, and Capital One. Right across the screen here in the United States of America, with the Dow Jones Industrial Average down almost 300 points, or about 0.6%. The S&P losing a similar percentage on the day. The NASDAQ Composite down about 0.6% as well. And the Russell 2000 lower by about 28 points, or about 1% even.
All right, back to the S&P 500 I go. And as I said, more of a risk-off trade. You've got 337 names to the downside. Isabel, 166 to the upside.
If you look at the IMOP, we're seeing it's loading for me, but there it is on the screen, completely red on the screen, except one tiny sliver of green there, but everything else is really looking like a down day today. The biggest losers, communication services, communication discretionary, and industrials.
United Airlines out with their earnings right now. Here, adjusted EPS looks like a beat, $1.19. The street was looking for $1.09. Operating revenue, $14.6 billion, slightly higher than what the street was looking for on average, of roughly about $14.5 billion. We should point out that available seat miles looks actually a little bit light, 77.7. The street was looking for 77.9, and passenger miles at about 63.39. The street was looking for about 62.66. The company also saying that it does plan to cut 5 points of capacity for the rest of the year. Sees capacity in Q3 and Q4, Carol, to be flat to up by about 2% year over year.
All right, and right now we see the stock down about 1.8%. I'm going to let Tim take it.
Yeah, I'm looking right now just at what's happening with United, down 1.8%. I'm looking at the press release. The company saying oil prices remain volatile and elevated versus the start of the year. United has already begun adjusting its schedule for the rest of 2026 to account for higher fuel prices, with an expected, as Romaine mentioned, 5-point capacity reduction versus the original plan. As a result, the company expects capacity in the third and fourth quarters to be flat, to up approximately 2% year over year.
We got to get to that redhead, Tim, that's crossing the wire right now. Full year adjusted EPS. Here's your guidance. The company says expects $7 to $11 a share. It had previously had a range of 12 to 14, so a material drop in its EPS guidance. The street was looking for 9.08 here, so the low end of that range of 7 comes in below that. The company also said that its fuel expense in the quarter that just passed, that was $340 million, $340 million, Isabel, year over year.
Another thing I'm looking at, which Bloomberg reported earlier today, is how Trump is opposing a merger between American Airlines and United Airlines, saying he doesn't like having them merge. I feel like this is also a story we need to be looking out for, which is the acquisition or the merger of all of these airlines, whether it will even pass the regulators, Romaine.
Yeah, certainly something. There's a lot going on in the airline industry. United Airlines, just going back there, down still about 1.8% here in the aftermarket. Company also commenting on fiscal year adjusted CapEx below $8 billion, below $8 billion. The estimate on the street is $7.71 billion. But again, it's that outlook. Fiscal year adjusted EPS, $7 to $11, had seen 12 to 14. Street estimate was 908. So street seemed to have gotten a good read on it.
Well, it shouldn't have come at too big of a surprise.
No.
I think Delta decided not to update its full year outlook. It cited uncertainty tied to fuel costs, geopolitical tensions. Look what happened this morning with Alaska Airlines Group. They pulled guidance for 2026 altogether. So, United coming out and saying, okay, it's not going to be what we thought it will be, but at least we're giving you numbers here.
Yeah, and it's kind of interesting, too. We're going to have to wait until tomorrow for their earnings call here to get a little bit more color out of the executives as to exactly sort of what they are looking ahead to here. I think we kind of have already managed to sort of look a little bit ahead, around the corner, if you will, given the prolonged nature of what's happening in Iran, the impact on fuel prices. And I think what a lot of people, Carol and Tim, are very sort of concerned about right now, the idea of how that feeds through into consumer spending and whether it tamps it down. We had a retail sales report this morning that showed, at least for the month of March, there wasn't a material impact just yet.
Yeah, exactly. It's an interesting point. I'm just looking at some of the other airlines. I pulled up American Airlines in the after hours. Not really much of a movement there. We are seeing JetBlue under some pressure in the aftermarket, down about 2%. So just trying to see if there's any carryover, because we continue to see United down about 1.8% here, guys.
Some other headlines that we're getting: United seeks to take delivery of over 250 aircraft by April of 2028. The company, though, cutting that fiscal year adjusted earnings per share forecast. First quarter fuel expense increases $340 million year over year. Fiscal year adjusted earnings per share comes to $7 to $11, saw between $12 and $14. The estimate was for $9.08. Still shares down about 1.8%.
I'm looking at our full story here at Bloomberg Terminal, and the guidance, as we know, came in stronger than expected. But it said demands remained strong, particularly among higher-paying customers, echoing comments from Delta and Alaska. Again, this is the K-shaped economy that everyone is talking about. If you're lower income, you're struggling. But if you're in the higher income realm, life is pretty good.
Well, let's talk a little bit more about that economy. Credit card company Capital One reporting earnings right now for the most recent quarter. Adjusted EPS did rise to about 4.42 a share versus what it was a year ago at 4.06. Revenue was actually up 52%. Of course, some of that aided by some of the structural changes in the company here. But the company's net interest margin did miss estimates, 7.87%. The street on average was looking for about 8.2% here. And the provision for credit losses was higher than expected, $4.07 billion. The street was looking for about $3.81 billion, Tim. And you see the shares slightly lower by about 2%.
It's that last headline, Romaine, that got my attention. Mm-hmm. The first quarter provision for credit losses coming in above estimates. Romaine, I mean, is the message that they're sending we're sort of planning for a consumer that could be a little weaker than we thought?
Well, yeah, and it goes back to that retail sales report, too. It was strong overall. There was a lot of spending on items, but, of course, one of the key metrics in there was how much people actually spent on gasoline in the most recent quarter. And eventually that gets to the idea here of sort of, if you're spending more on an essential like that, of course, it means the discretionary items, whether it's travel on a United Airlines or buying clothes and other things, maybe that gets stripped.
Yeah, right. You have to make choices. It squeezes out other buying, and then, you start to see certainly an impact, ultimately expected to play out in terms of economic growth. I mean, this is the thing that we keep talking about here, Isabelle, is that the longer this situation goes on, uncertainty goes on, higher costs, higher energy costs that really affect so many different Americans. I mean, eventually, the longer it goes on, it's going to potentially play out in retail spending and overall economic growth.
And the longer it goes on, we're going to see a deeper global energy crunch. I mean, the flows through the vital Strait of Hormuz is essentially at a standstill right now, and that's just one of the unresolved issues. I mean, we also have Islamic Republic's nuclear capabilities and Israel's military operation in Lebanon, and the list goes on.
So I guess the question that I have, then I'll go back to this, is as as we parse earnings, Romaine, is the real backdrop of what the market is grappling with. It's certainly, yes, it has to do with the micro and what these companies are saying, but it also has to do with what's happening in the Middle East. How long energy prices are going to be elevated, to what extent that affects the consumer, to what extent that is the flow through. I mean, we had Sam Dart from Goldman Sachs on earlier saying that she thinks manufacturing is going to be the next shoe to drop when it comes to the flow through on energy because of the chemical price increases that we're going to see.
And it's kind of an elongated nature. We always talk about kind of the lagged effects of, say, like monetary policy, but a lot of the strategists we've talked to also talk about the lagged effects of this elevation that we've seen in energy and commodity prices, and is not going to show up in those first quarter numbers. But when you get to the Q2 earnings season and Q3 and beyond, maybe you start to see a more material impact on the bottom line.
All right, just to remind everybody, you've got United Airlines stock down about 1.2% in the aftermarket. Capital One also out with results, and they're down about 4.5% here in the after trade.